All right, I'm Michael Hartzman. Today is Tuesday, February 25th, 2025. I'm on as always with my partner Dominic Tavella. You're still down in sunny Florida, but I have to admit, Dom, we had a really, really nice day today for a change.
I'm grateful because all things being equal, I will be joining you up there tomorrow. So hopefully the weather warms up a little bit.
I think the weather will hold, and it seems like we always segue from the weather to the market. I don't know, it is a show about the market. And I know this is really corny, but the market's been a little stormy. I'm not gonna lie. It's been a little tumultuous lately. There's a lot of stuff going on that, risk is off the table, wouldn't you say?
I think that's the best way to describe it, Mike. And we're going to get into the weeds on this one. But it's clearly been now over the last 2 weeks, but particularly last week, a risk-off trade. So all the high flyers, all the equity stock positions that had done just spectacularly well. We can talk about Bitcoin. Everything has reversed course and has gotten beat up pretty good. I dare say that most of the major, especially technology companies, AI technology companies, they've taken it on the chin pretty good.
Yeah.
And so it's a risk-off trade. The markets are definitely pulling back on risk.
So let me do the numbers like I always do. So through last Friday, February 21st, last week the S&P was down 1.63. Still up for the year, but only, I don't know about after today and yesterday, but through Friday was up 2.5%. I don't know if you saw it after the close. It's probably closer to flat now, or even maybe even underwater. The Dow was down 2.5, also up about 2.2% through last Friday. And the Nasdaq was down 2.5, and I'm almost positive that's going to be underwater for the year because it was only up.
It is now officially
Yeah,
negative for the
yeah,
year.
yeah. That doesn't surprise me. And last week when we were doing this wrap up, I mentioned that every index was up for the year, and that's no longer the case. Through Friday, the technology sector is underwater, and that's got to be more underwater now. Consumer discretionary was underwater. So yeah, things are definitely getting a little dicey out there. And you and I talk about headline risk a lot. I still think a lot of it is noise, but the noise is getting louder and people are getting more apprehensive. I'm getting more phone calls this week than I got last week and the week before about what are we doing? What should I do? Should I go to cash? The normal anxiety that happens.
Yeah, Mike, I don't want to add to the pain trade that you just outlined, but mid cap stocks now are negative for the year. Small cap stocks are negative for the year. And ironically, the don't touch it with a 10-foot pole international stocks are actually doing very well so far. So it's been a complete opposite of what everybody said we should be doing on January 1st. And we'll get into the whys in a little bit. But I understand clients are looking at the headlines, looking at the news every night, and they're worried. And when people get worried, they usually start to hold on to their money a little tighter. And certainly from an investment perspective, you look to get out of things that are very volatile. And we mentioned technology. And ironically, one of the things that have done very well on a year-to-date basis, healthcare. Remember, everybody wanted to get out of healthcare, Mike. Don't touch it. Look at the new administration. Look at Kennedy coming into office. It's going to be a disaster for healthcare. Healthcare also one of the best performing sectors year to date. So kind of the exotic stuff get out and the boring stuff get in.
Well, I'm glad you mentioned healthcare because you actually mentioned it this morning, just as I had to jump off a call, get to another call. Dominic, healthcare is such a gigantic sector. Are we talking about hospitals? Are we talking about brick and mortar pharmacies? Are we talking about research? We're talking about drug companies. So yeah, there's a lot to be nervous about with Kennedy being, in charge of the Department of Health. But, he can't touch all of it, as I said, and healthcare is such a gigantic sector, don't you think?
Gigantic, Mike. And so I look at the index literally every day, and there are companies in there like Eli Lilly and Novo Nordisk and United Healthcare and Johnson and Johnson. So you're primarily looking at the largest, really, I want to call them institutional kind of companies. But there's certainly going to be pharmaceuticals. There are going to be hospitals in there. There are going to be insurance companies there, like a United Healthcare. And you would think that the current administration would be very much putting their stranglehold on these companies to try to reduce costs. But the reality is they had gotten so beat up last year that just from a pure value perspective, they were selling at a discount. So when people are running away from risk, this is one of the classic areas they like to run to because let's be honest, Mike, if you need a prescription, you're going to take it. If you need a knee replacement, you're going to get it done. God forbid you need a heart valve, you're going to get the procedure done. You don't care where the economy is. So healthcare usually holds up very well in a slowing economic cycle. And I think one of the major reasons it's up year to date.
Yeah, and also people are living longer, which also
And
helps.
clearly are going to need more, not less healthcare.
Yeah, to your point, healthcare through Friday was up 6.5%, which is
And
very strong,
and
extremely
closed
strong.
today 8%, Mike.
Yeah, that's amazing. That's fantastic. And the other thing I want to remind our listeners and viewers of is in 2022, when the stock market really disconnected from reality and was really hyper focused on interest rates and a potential recession, the bond market also disconnected from reality. And that's what made our job extremely difficult in 2022. This year, thank goodness, there's not a recession trade, there's not hyperinflation, and the bond market, I would dare say, is really behaving normally and is truly a safe place at the moment.
Yeah, you're exactly right, Mike. In 2022, we had a higher interest rate environment. Interest rates were going up, and I don't care if there was a flight to quality, the value of those bonds were simply going down because interest rates were going higher. That seesaw effect. Today, we're looking at a completely different world. I'll say inflation has moderated a great deal. There's still a likelihood that the Fed is going to cut interest rates the later part of this year. But bonds have actually behaved very well the first part of this year, up very nicely for bonds. Now, we're not talking about exotic stocks, but for bonds, they're up very nicely so far this year and really are behaving like the safe haven they should be behaving like.
One of the reasons I love going through this investment journey with you is around 3:30. Someone you and I have a lot of respect for, someone you and I have lucky enough to be in the room with several times, was on CNBC on the closing segment, was Rick Reeder, who basically runs the largest fixed income group in all of the world at BlackRock. I
Yeah,
don't know what he
BlackRock.
manages, but it's a lot. And I texted you. I said Rick Reeder's on, and you texted back in a minute watching, right?
Yeah,
So
we if you don't mind me saying we on this one, right, Mike? We pay attention. We've known Rick for a very long time. We've been blessed enough to be in a room with him on many occasions, and it's pearls of wisdom, right? No one's got a crystal ball. Certainly not one that works all the time. But when a gentleman like him, with his experience and decades in our industry, when he speaks, you listen. And again, very calm, very patient, very methodical about his thought process. And I think we could put a bow on it, Mike, by saying, generally speaking, he's still very positive about this year and thinks we can do a very reasonable rate of return. Perhaps not the numbers the last 2 years, but a reasonable rate of return is in the cards.
yep. And he used a great word. You and I think we've just spent 10 minutes trying to describe what the market's going through. And I think he summed it up in one word when he called the market fatigued. And I thought that was very elegant. I mean, that's really, I think it's a great way to describe it right now.
Yeah, and if I can expand on that, Mike, a certain segment of the market fatigued, right? So you had a lot of investors, individual investors, certainly a lot of money managers, just piling into these very aggressive. I hope you don't mind me using that word, but stocks that were all linked to artificial intelligence, and everybody's going to make a gazillion dollars on it. And you start looking at some of the numbers now, and how much are these companies really going to spend on technology? How are they going to get repaid for the investment they're going to make in that technology? And I'm not saying it's not going to work. All I'm saying is it may take longer to get your money back or make a profit on the investment that you're making. And I think the markets are becoming coming to that realization. I think you would say that's fair, right, Mike?
100%. So, again, his timing was perfect because, I knew we were doing the show tonight, and 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 just, wrapping this segment up and looking forward for the rest of the evening. Tonight's guest is Jeff Oak, who's one of the Vistage chairs on Long Island. Vistage is a business organization that is dedicated for the last several decades helping CEOs and people who work in small businesses. I'll let him explain a little better than I can, but Vistage comes out with a CEO index. Really, they poll small business owners about their confidence. And today we had a really crappy consumer confidence number. And to have Jeff on tonight to talk about the CEO confidence number, Dom, I just think it's perfect timing.
Yeah, and it's amazing how much confidence, whether it's business owners, especially small business owners, but consumers, how that really leaks into the economy and economic growth. So this is a fantastic subject for us to talk about tonight.
So we will be right back with Jeff Oak, Vistage Chair, right here on Long Island. All right, I'm Michael Hartzman, back with my partner Dominic Tavella, as always, and our guest this evening, Jeff Oak, a Vistage chair, based here on Long Island. Proud to say I'm a member of one of the groups that you oversee. So thank you always for your guidance. And let me just start out, Jeff, with what is Vistage and what is the CEO Confidence Index?
Thank you, Michael. Let me first say to you and Dom, just I'm really delighted to be with you tonight and share this time with you. You guys are great interviewers and conversation partners. Vistage is the world's oldest and largest organization for CEOs and owners of small to mid-sized companies. We've been around for 65 years. We are a global company, 45,000 members in 40 countries, the majority of which are here in the US. And one proof point that we like to use, Dun& Bradstreet has done 3 different comparisons of Vistage member companies and non-member companies. And consistently, Vistage member companies grow more than twice as fast in compound annual growth rate. So that's a little bit about Vistage. The CEO Confidence Index is the largest and most comprehensive report, and Michael, you said it right, of the sentiments, the opinions and projections of CEOs of small to mid-sized companies. It's a survey that's been around since 2003. It is a trusted barometer for the economic outlook of our nation's small businesses. The small business sector, as you guys well know, accounts for 75% of all new jobs and 50% of the US economy. It's a really big chunk. This survey gives a very clear picture of the sentiment of CEOs, their views on employment, on capital expenditures, on profit and revenue expectations. We've recently discovered that the survey, which has been around, as I said, for 23 years, is a leading indicator of the U.S. Industrial Production Index by 9 months. You guys know that the IPI is a very key macroeconomic indicator showing transitions in the larger economy. The survey comes out once a quarter. We do a monthly update that we co-brand with the Wall Street Journal, and we'll talk a little bit more about the monthly between the big quarterly indexes. It was a very newsworthy monthly update just a couple days ago.
So Jeff, let's put it really in basic layman's terms, right? I'm in a company, I have a company, I'm the CEO of that company, and I'm in a really sour mood about the prospects of the future. How does that affect my business? How does that affect the economy?
Great question. Small business owners and CEOs, they're making decisions all the time. And they're making decisions about investments. They're making in decisions about what markets to enter or exit, whether to take on more staff or trim their staff. So they're making decisions all the time, and those decisions are informed by a lot of things. And most importantly, it's informed by how they're feeling about the bets that they're either making or not making, or the contraction, the risk avoidance that they're either taking or not taking. So it has a profound influence on decision making for sure.
So to that point, and Dominic and I have been talking a lot about this since the election. You shared with us your Q4 2024 CEO Confidence Index, which was off of the Trump post-election sugar high, and the numbers were very impressive, and we had a nice bump. And then this morning when we spoke, you said, I got an update. And Dom and I have talked a lot since the beginning of the year about tariffs, about Musk, about Doge, but a lot of things which are really creating a lot of anxiety. And how has that manifested itself with the CEOs across America, and how their mood, to use Dom's word, has turned a little bit sour in the last 30 days?
With amazing speed, Michael, I might add. So let me talk about the tale of two cities. We did the quarterly survey in the first couple of weeks of December. And here's what I thought I was going to be reporting on tonight. Here's what I thought last week. CEO confidence was at the highest level in 3.5 years. Expectations for everything: revenue, profitability, plans for investment, hiring. Expectations also at the highest level in 5 years. That's what I thought I was going to be reporting on. Yesterday, the results of the monthly update, which was a survey taken earlier this month, so roughly 6 to 8 weeks after our quarterly index, and it's the biggest drops in one case in the history of the survey. In the case of a couple of other metrics, the biggest drops since we were hit by the pandemic. So what's noteworthy is not just that we've gone from, very, very high levels of confidence to a very different sentiment, but how rapidly and how steep those declines were. We can talk about some of the details, but suffice it to say, it was a completely upside down set of numbers um, earlier this month as compared to a month after the election.
And Jeff, again, stating the obvious, but you're talking about the people that literally are the front line,
Yes.
right? You're talking about small business owners, and we're going to get to the consumer in a little bit, but these are the people that literally have the pulse every day and having to make a decision every day on hiring and firing, inventories, expansion, buying a building, all that stuff, right? They're making that decision daily, and that mood swing literally is 180 degrees from where it was maybe a month or two ago.
Absolutely, Dom. Yeah, I don't know where to begin. The Michael, you mentioned tariffs. There are a lot of different concerns. Many of them are rooted in the concerns about the uncertainty about the impact of tariffs. That affects a whole host of things. For example, there are some companies in the groups among the CEOs that I serve prior to the election, in anticipation of the tariffs, they were hoarding inventory to try to get the stuff that they need from China, Canada, Mexico, wherever it might be, so that they could avoid the tariffs. Lock some stuff in their warehouse in inventory, preparing for tariffs. So that affects costs in a different manner. It affects labor. What labor do I need? CEOs in the small business space are asking. How do I need to think about my pricing? We're finding in the monthly update that CEOs, they're revisiting their pricing strategy. They're revisiting their labor plans, their employment plans. They're revisiting their fixed investments. Which ones are they going to make? Which ones are they going to pull back from? And I think there's still a lot to settle out as the implications of the tariffs really become clear. They might change, and they might not. And whether they change or don't change, it's still too early to say what all the implications are. But to your point, Dom, small business CEOs and owners, they are looking at the landscape, and they're shifting what they're worried about, the bets that they're willing to make, the bets that they're not willing to make, and their overall general sentiment about the future of the economy.
Jeff, what's amazing to me about what you just said about how the sentiment has changed, this is not, excuse me, this is not a Fox News survey. It's not a CNBC survey. These are small business owners who have an honest opinion. They're Republicans, they're Democrats, they're independent, right? But they're answering your question not with what is politically expedient or who they may have voted for. They're really answering their question with their pocketbook.
Yeah.
And it just, so to me, this has more validity than any poll you would see that's put out by a network.
Yeah. Absolutely, and I'm glad we're going to get to the consumer index, because we had some big drops there as well, and that has its own relevance for different reasons, right? Because consumers are the buyers of everything in the economy. But when you think about the role of a CEO and small business owner, um, they're trying to run a business. They're trying to provide products and services. They're trying to keep people employed. They're trying to contribute to their communities. And the bets they're making, they're not politically driven. They're driven on, okay, what do I think is going to happen with my investments? Where do I need what are the big plays I need to make? What are the things I need to pull back on in order to keep my business running effectively and my folks productively employed? It's a really key look at the economy.
And Jeff, again, speaking both myself and Mike, small business owners with staff that have been with us for a
Sure.
long time, you don't hire and fire lightly. So these business owners make very careful decisions because once they bring somebody on board, the idea that they're just going to fire him tomorrow, that just doesn't happen. And both myself and Mike, but plenty of our clients that we work with. So their thought process and all this is really critical to, and you mentioned 9 months down the road. So what do you see 9 months down the road?
Well, if our the past projections, and again, it's an indicator, it's not a guarantee, but there's going to be pullback. I mean, let me just talk about a couple of the things that I think I would expect to see is I think we're likely to see price increases because the price of the tariffs, these small businesses, they got to bear that. And our survey indicates that owners of small businesses are really contemplating price increases. They're contemplating lower margins in their business. So what does that mean? Well, that means they're going to have less cash, and they're going to have to be even much more careful in their decision making. I would expect to see cost-cutting measures becoming more prevalent in the small business space, and a general. There's still, I think, roughly a little less than half, roughly about half of the small business owners think that the future outlook of the U.S. economy is positive, but that's down from a really significant majority who were very bullish 8 weeks ago about the future of the U.S. economy. People are going to be taking much more of a wait and see, and we'll see how this unfolds.
And I'm just looking at the report that you sent me, and the one that really struck me is something that Dominic mentioned. I think you alluded to fixed investment plans. The proportion of small businesses planning to increase fixed investments over the next 12 months fell to 34%, while the proportion planning to decrease rose to 15%. And that's one of those things that has a trickle effect on the entire local community where those business owners are.
Yep. So let me tell you what I was going to say before we got the report within the last few days. Uh, and this is based on the data from December. There is going to be a sweet spot, so we thought, for making significant investments in the first half of 2025. Investments in people, investments in technology, investments in fixed assets. That's what the survey was suggesting would be good bets to make based on the data that we had 8 weeks ago. And the data now is saying, hold your horses. Hold your horses on those investments. We got to see how this thing plays out. And you two know better than anyone that uncertainty is not good for markets. And there's a lot of uncertainty. There's not only the drop itself, but the fact that the drop happened after such a big boost in confidence. There's a certain fragility. And Michael, your comment in the first segment of the show about the market being fatigued, I think the same could be said about business owners. I mean, how do we've been waiting, and we thought we were going to be in for a nice run here in the first quarter, first half of 2025, prepared to make investments. And now I'm not sure I'm going to do that. I'm not sure I'm going to do that.
So Jeff, and again, we're going to get into the whys, but we were looking just a month or two ago where this current administration was talking about an America First policy, and clearly that would be negative for international and very positive for medium and small companies here in this country. They're primarily domestic
Yeah.
oriented companies, and most of their revenue comes from domestic. They don't really sell abroad, or not significantly anyway. So what happened in a basically a month or 2 month period? You went from a group that was looking to benefit from the current policies or policies to be implemented versus where we are today, where I guess they don't see a bright future?
Well, so a bit of nuance about the results 2 months ago. They were overwhelmingly positive sentiment in every domain. This was a month after the election, but there was a hint in those numbers that there was a little bit of uncertainty about tariffs. So, mind you, that was a month after the election. There was still not a lot of announcements about the tariffs. There's been a lot more since December, where the things that the administration has in mind, the plans that it has. There's also a level of global uncertainty. Yes, Dominic, you're right. The majority of small businesses operate in the U.S., but there are many, many industries, including in my groups. I know this from the CEOs I work with directly, who get a lot of their sourcing, from outside the U.S. And that's a big deal when one of your main, you know, vendors supporting, your business here in the U.S. is sending you parts and equipment from countries impacted by tariffs, and so it's very consequential. This tariff move is the root of the uncertainty. All the things that I talked about, like cutting back on infrastructure and the workforce and such, is really ultimately linked to the concerns about the ripple effect of tariffs.
Jeff, and look, this may be just your own thought because this may not be in the survey. Say what you want about Trump, he campaigned on tariffs.
Yeah.
I mean, it's not like he got elected and the next day he said, I could do these unilaterally and I'm going to. I mean, we knew this was the plan. So is this more of taking Trump, you know, don't take Trump at his word, more so as what he does? I know, Dom, you like to say, carries a big stick, but he's probably not going to do these things. So I'm just confused, Jeff. This is not new. Why in 6 weeks did someone wake up and say, "Oh, he was serious about this"?
Yeah, I don't know that I can answer that, Mike. Yes, there is no surprise. He talked about tariffs, when he was campaigning. No surprise. Um, and and to Dominic's point, there are probably people who thought, well, he's going to say he's going to do that, but he won't really, or he'll do less, or what have you. But when the announcements are actually made, and the demands made, and the indications of direction, when the person's in office and the reality of it is really coming home, um, it's a little different than someone talking about something that they're going to do and moving in that direction. And I also think that the uncertainty with respect to the Ukraine-Russian war, and a very different posture toward NATO and Europe. Those things are not surprises either, because he talked about many of them while campaigning. But when someone is talking about it and when the things are actually being done, there's a different level of reality to what's this confluence of factors.
So Jeff,
Dom, you're more of a Trump whisperer than I am.
well,
So
let me kind of pose a question, and I know we're going to come up on the break, and so I'll give you a minute to think about it, and maybe we'll pick up the answer on a break. But one really big difference is in the last month is this whole Doge initiative, which sounds really great. Oh, we're going to cut waste out of this department and that agency, but all of a sudden, every single day, the headline is how many people lost their jobs. And I think psychologically, you're watching the news and this many people lost their job, or God forbid, you actually may know people that are losing their jobs. I'm going to bet that that has a big factor in where your mood of the survey has changed a lot.
Jeff, you want to noodle that around and take a break, or do
Yes,
you want to? All right, all right.
let me noodle on that.
It'll be like Jeopardy. We'll take a break and you'll come back with the
We'll give you a
answer.
chance to come up with the answer. We love, can't wait.
We'll be right back. All right, I'm Michael Hartzman, back with my partner Dominic Tavella and our guest this evening, Jeff Oak, a local Vistage chair on Long Island, my Vistage chair on Long Island. Um, Jeff, right before the break, Dominic, you dropped the Doge bomb on you. I think it's real. I think Trump's first buddy is, a picture of him with a chainsaw at whatever conference he was at over the weekend is quite frankly not helpful. He's creating a lot of anxiety, and you know, I think it's a great question, and hopefully you had time to think about it. What do you think? How much do you think that has contributed to CEOs being more nervous than they were 6 weeks ago?
Well, and this is me talking. This is not, our survey is silent on this, but I would just offer a couple of observations. I do think while reducing the size of government is a very popular idea among many, it's also true that the federal government is not just in Washington, D.C. Um, every red district and every blue district has federal workers, whether they're running clinics for kids, whether they're sending out Social Security checks, whether they're fighting fires or in law enforcement, federal-based law enforcement, and a variety of things.
Or landing airplanes, I might add.
And yes, exactly, airplanes, air traffic controllers. And so when people are learning about their neighbors or family members or best friends or college buddies or what have you who are losing their jobs, it has a different impact. And I think the breadth of the terminating of people is so vast that it's impacting not only so many people, but so many regions of the country. And we've seen lots of news stories about when Republicans are going back home to the districts, they're getting a lot of pushback, a lot of pressure. So certainly, I think the impact of so many people losing their jobs, and questions about are the services that we rely on, can we count on them? Um, and I also think the the shaking of the foundations of one of the longest alliances, in history between the U.S. and Europe. People are questioning, can the U.S. be counted on? That has not only diplomatic and national security implications, it has economic implications as well. There's a level of chaos, I think, that I'm seeing in the news and in conversations with folks not only locally but family and friends around the country. I'm curious how you two are seeing this as well.
Well, and I brought it up the question for a purpose in that, we're hearing it from our clients, right? I don't think anybody would, Democrat or even the Democrats have said, we have way too much waste in government, and the way we procure and spend money is not very logical, common sense. But back to your point about the Republicans going back to their districts and getting a pretty difficult time of it. Can't we do this in a more gentlemanly fashion? Can't we do it in a more, I mean, these are real human beings, and maybe we don't need those jobs anymore, and maybe where there is too much fat, but can't we be a little bit more, we're dealing with real human beings, and having real humans treated or mistreated in this case, it's just not, I think we're better than that.
Yeah.
And look, the whole story about the military, spending $200 on a pencil or $5,000 on a toilet seat. These are not new stories. We've been hearing those things for 30 years. And I think the point is no one would disagree. Like you guys said, yes, we need to be more efficient. But Jeff, you used a great word, and that's chaos. And I know you talked about discussing the consumer. And I think the difference is right now, as it relates back to the market, is the CEO index you said is kind of a 9-month indicator. I think the consumer indicator is right now, right? I think the
Yeah.
fact that the number today with this morning, that's what people are feeling right now.
Yes. Yeah, there's the other thing that I would add. I think it's there are many, many CEOs, celebrated CEOs, who've been celebrated for their ability to basically tear down stuff that's dysfunctional. And in large companies, you got to do that. And the worst that can happen, you lose some profitability, and some people lose their jobs. But we celebrate CEOs who take, the chainsaw to their organizations in the interest of improvement. I think, the federal government and the services that are provided are so widespread that that's a little trickier to do. It's not just, we lose some profitability for a quarter while we weather this downsizing, but am I going to get my Social Security check? Is my kid going to get a healthcare procedure, or is research going to be done in the medical space? Will cancer, research and all other kinds of medical research, is that going to continue? It's not as simple as vast, cuts, reductions in force in the corporate sector. There's some important differences that are shaking. Dominic, to your point, there's an unease,
And
a
Jeff,
feeling.
I'm going to come back to a point you made earlier. When you have that unease, when you're uncomfortable, you're just going to hold on to your dollars that much tighter, right? I'm happen to be down in Florida, one of our favorite restaurants, and this is peak season. And my wife's like, you can have any reservation you want anytime you want. And that never happens, or at least in my recent memory, right? And we're seeing that in the consumer confidence numbers. We're seeing it in the spending numbers. We saw it in the Walmart retail numbers. People are holding on, even though they have them, Jeff. They're just
Yeah.
holding on to those dollars tighter because they're not sure of the future.
Yes.
And there's
Yes.
real economic impact to that.
Yeah, absolutely. Absolutely. And consumers are holding on to their own money.
Right.
CEOs, survey is showing they're holding on to their company's money. And so their decision is exponentially greater impact per decision. It's a big deal. There's a reason that this thing is a 9-month leading indicator of the industrial production index, because the decisions that these individuals are making is really on behalf of companies. Some of them, even though they're small businesses, are good sized.
And so let me put you on the spot a little bit. You know, in looking at your background, you have a PhD in ethics from Yale University. So I don't know if that makes you a doctor of ethics or not, but if you were in the classroom, 20 years from now, teaching about this period of time, what would your take be?
Wow, that's a great question, Michael. I'd one thing that comes to mind is taking off of something that you said, Dominic. When significant changes need to be made in government, society, business, what have you, there's the what of the change, and then there's also the how of the change. You can make very significant draconian transformational changes, and there are better and worse ways of doing that. And so I think um, this is where I think ethical perspectives can be relevant in how changes are made. And there's a lot of concern or criticism about um, not so much the what of the government's changes, even though some have concerns about that for sure, but the how. And part of the how is the speed. Yes, we need to move quickly in many instances, and there's such a thing as moving in a ham-fisted way, or too quickly, in a chaotic manner, in a manner that doesn't make sense to lay people. And when, even though there may be very good reasons for the manner in which things are being done, the perception is that the manner in which it's being done is maybe we're capable of more than that. Dominic, you alluded to that. I think I do think there's some commentary around um, you know being stewards of our own resources as a nation. Did we get overextended? Maybe. Do we need to make some changes? Probably. uh, and how we do that, and the timing, and the rationale, so that there's buy-in. When any of us makes big decisions in our companies, uh, when we expect that there's going to be lots of strong reactions, we want to get people on board, right? We talk about what we're trying to do. We talk about the why. We tell them what's going to be coming, prepare them. They may not like it, but they're going to feel a lot better if they feel like the reasons have been explained, and the method in which it's done is viewed, broadly speaking, in a fair manner. Back to my ethics days, there's a piece of research that I was involved in many, many years ago, that when it was actually a corporate context, when people don't express a grievance, and they don't get their way, if they perceive that the process was fair and above board and transparent, they more readily accept the outcome, even if it's one that they don't agree with. And so I do think that there's something to be said for getting buy-in when making, big decisions and big changes. That applies on the corporate side. And I think it also applies, kind of on a national scale. Uh, what are we doing and why? And why are we doing it in the way that we're doing it? And I think that invites, I think, some ethical reflection.
Look, the amount of debt we've accumulated in this country, I call it helicopter money, money that went out the door that we didn't even have. We had to borrow it. It's unsustainable. We know that, and frankly, it hurts really the weakest people the most, the poor who can't afford basically to put food on the table. those people get hurt the most. So something has to be done.
Yep.
But can it be done? And I love your word fair. Or can it be done in a fairer manner, maybe in a more transparent disclosure manner? I know Musk has talked many times about, hey, we're going to break things. We're just going to fix it. But boy, oh boy, you literally could tip us into a recession just because psychologically the average person out there just lost confidence.
Yeah. Yeah. Well put, Dominic. Very well put.
And to your point, just came back to the ethical side of it. I think that could also shake people's confidence, because if they're not feeling good about the general environment, or the word you used earlier, Jeff, about the chaos that we see. But again, this is 2.0. I mean, we've seen this movie. We saw this is a sequel, right? And they say the sequel is never as good as the original. But I don't know what part of any of this should surprise people. We've seen it
Mike,
before.
I would argue the subject that we're really spending quite a bit of time on. I think the Doge and firings are really psychologically affecting people out there. I
I
think putting
agree.
the news on every night really is a sad state of affairs for the average person watching it.
I agree, but Dom, you have to, but there's, let's say 50% of the viewers are getting their information as this is long overdue, and it's just part of the process, and it's not as bad as you think. So, and as I said earlier, this survey that Jeff is a part of, these are Republicans, Democrats, and independents who are feeling this way and not getting their view from one news bubble or another. So it's what they're feeling.
Yeah. Yeah. No, I think you
Go
make a
ahead,
great
Jim,
point,
please.
Dominic, about psychology. You know, um, the way we make decisions, including economic decisions, a lot goes into that, right? And I think if there's fear or unease or uncertainty or what's going to happen, there's a psychological effect to economic decision making, a psychological cause to economic decision making, and that's for consumers and for CEOs as well.
So, to your survey about the CEOs, again, you said the stat. I'd love you to repeat it. What percentage of new hires are done by small businesses?
75% of new jobs comes from the small business sector, and 50% of the economy as a whole is the small business sector.
And this loss of confidence by these small business owners, and we're defining small. Maybe we should have defined that a little bit better. That's, if I remember correctly, under 100 employees.
Um, the Small Business Administration, I think they use 1 million to 1 billion. Our cohort of small and mid-sized companies is typically 1 million to 250. That can be anywhere. I mean, that can be up to several hundred employees.
Several hundred employees. Okay. So if these people, again, through this fear factor, concern, not quite sure, stop hiring,
Yeah,
that's
big
real
deal.
economic effect.
That's a big deal.
That's a big deal.
Yeah, and we're gonna know. I mean, I've always been interested in this survey. I'm going to be really interested in light of this very steep increase in confidence in early December, and then an equally steep, in some respects, steeper decline 8 weeks later. And I'm just going to see I'll be interested to see where the line goes from here. Does it keep going down or does it level out? But it's a very meaningful and significant velocity of change, and that's what we partner with in economics. Our data is we do the data, but then it's really analyzed very very well respected economic forecasting firm. And in the details of the report, they say it's the velocity. Several points that the velocity is what's concerning.
And to your point, Jeff, it's not like General Motors or Toyota closes a plant somewhere in, Tennessee or Georgia, and that community and the perimeter is affected. Small businesses are literally everywhere.
Yeah.
I mean, it's they're all over the entire country. So that's why this is such an important survey, and why as you said, these numbers can be troubling because it's just kind of something that can be, spread out everywhere.
Yeah. Yeah.
So
The
I
good thing
hate
about
to.
the good thing about the small business sector is that it's very agile because it's small. There's an agility that very, very large companies maybe don't have quite as much of, and so and the small business sector is also very resilient. And so that's maybe a a good news note, as you know, as we draw to a close here, that the small business sector is very resilient. It's very agile. It's very resourceful, and it's very strong. But like anything, even strong stuff can bend, and but that's another set of characteristics of the small business sector.
But clearly, Jeff, you would agree. Obviously, I think it's your point. The alarm bells are going off on the small business community, and we looked at just last week the retail sales number from Walmart, and they were very soft, and it looked like they were getting softer. So you got the consumer alarm bells going off. Something's got to change here, or we may really have a problem.
Yeah, yeah,
Right? And the mood could change very quickly. I think that's the point you want to make.
yes, yes.
So Jeff, thank you for your time tonight. We've talked about, you doing this quarterly as this survey comes out quarterly. So I hope you enjoyed your maiden voyage on the Lebenthal Report.
Yes, yes. You guys weren't too tough on me. I appreciate that. And
No, you got great stuff to bring to our attention and our viewers and listeners, and I it couldn't be more relevant. So yeah, I hope you come back, Jeff.
I do. I would love to. I mean, great conversation. I love sharing this data, not only because of what it tells us, but it's really, really important data for business leaders. They need to know this stuff, and I'm delighted to share it. And it's really an important part of what we do in Vistage to help leaders grow their businesses, grow themselves as leaders, improve their decision making. This is a source of data to help them do that.
Thank you,
Well,
Jeff.
thank you for enlightening us, Jeff, and we will certainly have you back. I think we already have you scheduled for, is it May? I'm not 100%
Yes, I can't
sure.
wait. I can't wait. Really looking forward to it.
So we are taking next week off, but Dom and I will be back in 2 weeks with a new edition of the Lebenthal Report.